Hello traders, Gary Wagner here. It is 12:25 in Honolulu, 6:25 in New York on Tuesday, 25th day of June, 2024, and this is the evening report for gold and silver. Monday's gains were modest at best, not accounting for the dramatic $38 price decline that happened on Friday. Today we did see more selling pressure, a total of $13.60, taking the most active August contract to $2,330.80. Currently, gold is trading overseas and fixed up a couple of dollars from New York's close, up $2.20 at $23.33. Dollar strength today was only fractionally responsible for the $13 decline in gold. When we look at daily activity in the dollar, it gained 0.12%, taking the index to 105.642, but the 0.12% is only a fraction of the percentage decline in gold today, which means that the vast majority of today's price decline was the result of selling pressures by market participants and traders. Silver continues to have a small price decline. If you recall, both gold and silver sold off sharply on Friday. Although silver lost nearly 4%, gold recovered fractionally yesterday, but silver continued to decline, and the decline had a strong follow-through today, with the most active July contract of silver giving up 65.5 cents. That's a net decline of 2.23%, taking the most active contract to $28.87. This 1-hour candlestick chart of gold futures clearly shows that yesterday's gains were completely erased when today we saw gold trade to a lower low than yesterday, with lower closes on our 1-hour candlesticks. In terms of interim support, we look at the activity that occurred on the 18th day of June, in which gold opened and closed at around 23.22 and had lows at around 23.20. The price point, we believe, is the first level of support, with major support occurring at $2,300 per ounce. The fact that gold was able to close back above its simple 50-day moving average was important but short-lived, as today gold opened above but closed well below that. We have seen gold trade within a very narrow range, with the exception of last Friday and Thursday, Thursday's major uptick and Friday's major price decline. It has traded in a range between 23.30 and about 23.48, and I'm addressing just the real bodies and not the wicks, the differential between the intraday highs and the open or close, and the intraday lows and the open and closing price. As long as gold is able to trade above the low that came in on June the 10th, our model is looking at the lows at 2,300, and subsequent recovery has a high probability of being a key reversal or pivot from bearish to bullish. And if this model proves to be correct, and we do see higher prices after hitting these lows on the 10th day of June, it would signal the return to a impulse phase, meaning the beginning of a 5-wave bullish move, and it would result in gold moving above the current all-time high. The caveat being, if gold breaks below this recent low at 23.04, that would invalidate that assumption as well as this model. Lastly, I do want to take a look at silver. We are looking at a daily continuous contract of silver futures, this representing the July contract. We talked on Friday of our year-end outlook that if silver broke above 32.40, this recent high, there is no strong resistance until $40. However, recent price activity has not proved that silver wants to not only break out and move up to new highs not seen in a while, but has been trading within this channel to lower pricing. The last thing I want to point out is this simple trend line from this low back at the beginning of May to these series of lows that came in the middle of June. Today's move broke below that, suggesting that this downward bias and channel line is still in play. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.